Hey everyone, I'm Scott and welcome back to the channel. For the past year, I have been heavily researching into various property strategies as I navigate my own property investment journey. I have spoken with various different investors who have a range of strategies on how they make money when it comes to property. In today's video, I'm going to give you a deep dive of what I have learned over the past couple of years when it comes to property investment. I'm going to be covering 4 popular property investment strategies, and if you're new here, hit that subscribe button and don't miss videos like this one. Okay, first off, let's kick off with Airbnb. Now, who hasn't heard of Airbnb? This platform has over 4 million listings worldwide as of 2022, and it has seen enormous growth since it was founded in 2008. Here are some of the pros. There is high revenue here to be had, so if you own a property in a tourist hotspot, you can expect to earn somewhere between 30 to 50% more income compared to a traditional property rental, making this one of the most profitable incomes when it comes to property investing. You also have the flexibility to block out dates for when you want to use the property yourself as well. You can also forecast your income by seeing how booked up you are in the upcoming months, but obviously this can fluctuate. Now moving on to some of the cons. It can be time consuming constantly managing bookings, guest experiences, reviews, arranging cleaners. It can be draining. This means you will be busy either dealing with the admin duties yourself, or you're going to have to outsource this to a third party, which will essentially cut into your profits, whether you like it or not. With so many people coming and going into the property, it is likely that there's going to be some minor damage. At some point, stuff will go missing as well, which you will ideally need to fix before the next guests check in. But Airbnb's platform should give you some security on this anyway. Of course, you can get no bookings, which is not ideal. Ideally, you want the property to be booked out every day, but as you probably know, this isn't always going to be possible. So make sure that you run the numbers and your own stress tests and calculations to make sure that you can afford to run the property on a significant lower booking capacity, just in case. Regulations. You need to be cautious of local laws. Some cities have strict rules about when it comes to short-term rentals. So be sure to do your research if you're looking at having a property overseas. Now, location can play a huge factor in how desirable a property is and the rates that you'll be able to charge. Now, this is something that you need to bear in mind, as not all properties are going to make you a fortune. Next up, let's dive into HMOs, or as it's also called, houses in multiple occupation. Now, some of the pros here is that it's still a higher income. You can expect a 20 to 30% yield compared to a traditional rental because you're renting out individual rooms rather than the house. So let's say you're renting out a 3-bed property. You can convert the living room to another bedroom, so now it is a 4-bed property. Here's an example using some numbers on a property in Cambridge. So let's say we have a house that rents out at £1,400 a month, but the rooms rent out on spare room at around £700 a month. So you have 4 rooms rented out, which will give you £2,800 a month, which means this will give you an extra £1,000 a month compared to a traditional rental. Pretty good, right? So you can see why this is also a popular option. Now, risk diversification. Even if one room is vacant, you'll still be able to earn from the other rooms, which makes it less likely to go from 100% occupancy to 0% occupancy. Now onto the cons. Management complexity. More tenants means more issues to manage. I've heard of stories where people have had difficult tenants, which has caused other tenants to move out. Now, if you were the landlord in this situation, you would be pretty annoyed. Rightly so. Legal requirements. Something else you'll have to bear in mind is additional legal requirements. You will need to comply with stricter fire safety and maintenance standards as well. HMO licenses can be costly as well, and they can vary depending on the local council. So it's definitely worth doing your research into this first. Good old traditional rentals. This is the bread and butter of real estate investing, and a great option for those who want minimal work and have a lower appetite for risk. Now, one of the main pros is that this is going to be a more stable income. It's going to be more consistent due to the long-term tenants that are going to be in the property. Usually minimum terms are around 6 months to 12 months, but I would recommend getting a property management company to look after the property for you, as this will give you peace of mind. You can carry on with your life and don't have to worry about dealing with constant admin, taking phone calls, or dealing with constant maintenance issues. Now, this method is also a lot less hands-on compared to Airbnb or HMOs. You could manage the properties yourself if you have the knowledge and the time and the patience set aside for this. I used to work in property management myself many years ago, and even now I wouldn't want to have to deal with tenants and issues and maintenance. It just gives me PTSD, because there can be a lot of admin that goes with this. Some of the cons would be lower income. Generally, you earn less than an Airbnb or HMO property. The risk factor is obviously lower, but so is the profit. But this strategy is often seen as a long-term strategy when investing in property, as the margins are smaller and you're betting on the capital appreciation of the property going up long-term in the future. Hopefully the capital appreciation long-term will make up for the short-term fall in yield. Now, these properties can be financed on an interest-only mortgage, which will give you more cash, but you won't pay off any of the debt against the property. You can do a capital repayment, but there is going to be less monthly profit off the rent, as the payments are likely to be much higher. Again, this strategy is more about the long term. Now, one of the other risks is vacancy risks. A vacant property means no income. Compared to a HMO where it can be either 100% or 50% or 25%, the HMO is still going to be occupied to some extent. When it comes to a standard rental, it's either going to be 100% occupied or nothing. It can also take time to find new tenants due to background checks and planning moving dates. So be sure to plan for vacant periods just in case. But if you've invested in the right area, the property shouldn't be vacant for too long. The average ROI for rental properties in the UK is around a 5 to 10% yield. The best way to work out your yield is annual profit divided by total investment times by 100, and this will give you a percentage. Finally, flipping properties. To put it simply, you're going to try and buy a property at below market rate. You're going to renovate the property to see if you can add some value and try and sell it at a profit. Sounds simple, right? But there is more to it, trust me. So one of the pros is there can be quick profits if executed well. You can make a large sum of money in a short period of time. If you've done your research properly and had no unexpected issues pop up, you can make some good money. Now, you can be quite creative when it comes to this investment strategy. This method allows you to put your own design skills to test and see what you can create to make an attractive property to a prospective buyer. Pinterest is going to be your best friend when it comes to finding design trends. Now onto the cons. It is very high risk. Market volatility can eat into your profits rather quickly, whether you like it or not, which is something that is completely out of your control. Just look at the mortgage rates rising constantly in 2023, making borrowing extremely difficult and therefore reducing the number of potential buyers on the market. It's also capital intensive and requires a lot of money to start. Not only this, but renovation costs can add up quickly. But if you have a network of people who can help you, or you have the skills yourself, then this will make things a lot easier. This method can also be quite time intensive, as you'll need to either do all the work yourself or be a project manager and manage the contractors who are doing the work for you. This is going to involve using lots of spreadsheets to track timelines and budgets as well. So you need to have good attention to detail, or in the long term, you'll end up paying for it, literally. It can also take time to find a good deal, as not every offer you're going to put forward on a property is going to be accepted there and then. When I've done this in the past, it's taken me at least 3 months to make sure I got a good deal. You can try your chances at auction, but that is something completely different, and I've got a video on that on my channel. This method of property flipping, in my opinion, is better for someone who wants to generate a significant income to replace their full-time job, or someone who wants to use the property flipping method as a way to fuel their cash flow to move on to bigger projects without having to borrow additional cash. When I've done this myself, the most I've made on flipping a property was £40,000 in one go. But this was an exceptional deal and I had a lot of things that went in my favour. So there you have it. Airbnbs, HMOs, traditional rentals and property flipping. Each method has its own set of pros and cons. All of them are competitive markets for different reasons. But the key here is to make sure that you diversify your portfolio and manage your risks effectively. If you have any questions or thoughts, leave a comment below and I'll come back to you as soon as I can. And remember, investing in property is a marathon and it's not a sprint. If you like this video, make sure that you hit the subscribe button and I will see you soon in the next video.